Yeah, good morning, everyone. So yesterday we saw again correction kick in US. Market in the futures were were higher and also opened higher, but during the day sell-off came and US market came off. The older worries are still continuing, like the slowdown which is expected in the US, which is which needs some other data to change the view. But overall, what we see that up till now, results in the US markets are comparatively okay. So people are discounting for the futures that there could be some slowdown, uh, which may have which for which we have already seen some corrections and quite possible that some more can be there in the near term. Uh, what we see that the futures are more of a flattish. Asian markets are giving indication of a mixed trend. That is, few of the markets are positive and other are negative. Whereas if you see the commodities are seeing again oil has seen some bounce back, but iron ore and steels are down by around 2.5% and 1%. So quite a mixed reactions from the international market. Yesterday we gained looking at the US market and all, but since those markets are not holding up, we are seeing some opening gap down because of that. But what we see that though it may come off open lower, but it will stabilize over there and can see some stock-based buying also. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, last two trading session, we saw some bounce back rally, but again, Nifty facing a immediate resistance around 24,300 and 24,400 in upside. Today, we expect gap down open because of global cues, and if Nifty again break the important support zone, that's first intraday support zone is comes around 24 130 140, and below that 24,040 is a major support for Nifty. If Nifty break this important support 24,000, then we expect further sell off to be continued towards below the 23,900 and 23,700. Upside majorly resistance place around 24,300 and 24,400. If Nifty again trading above the 24,400, then we expect major pullback rally and maybe seen again upside rally. Till that, it Nifty trading within the range that is 24 4 and 300 in upper end, and downside 24,130 to 24,040 as a downside range. If Nifty break either side, then we expect the momentum towards upside in 24,400 and below. Then we see the major selling pressure towards 23,700 and below that important level. Bank Nifty also trading the near the support zone that is 50,000. And big Bank Nifty again break this 50,000 zone. Then we expect further downside towards 49,770, 49,770 and 49,500 at downside. Upside, 50,050, 500 is a major resistance for Bank Nifty. Is Bank Nifty break this, then we expect further upside in it. Fin Nifty also trading in near the resistance zone, and upside was immediate resistance place around 22,980 and then 23,000 in upside. First support place 22,760. Below that 22,620 and 600 at downside. Major support for Nifty. So overall, today we expect gap down, but we closely watch first half because today's weekly close expiry also Nifty. Is Nifty break the 24 140 and trade below that, and major next support 24,000, and if Nifty is trading between this range in the coming session, but closely watch first half 23,140. Below that 24,000 next Nifty support is placing that. And stock specific, Apollo Tire looks weak. Hindalco also looks weak at current level. We see some pressure in Hindalco. Yesterday, last 2 to 3 trading session, we saw that Hindalco trading below the 630 level. And we expect track towards 200 DMA around the 580, 590. So we expect downside Hindalco towards 590 level. Positive side, Aurobindo Pharma looks positive. We already given call in Auro Pharma. We expect this positive momentum to be continue right now, trading the all-time high, but this momentum to be continue till the upside 1500 and 1520 in upside, and majorly support place around 1430. That's it for technical. Derivative guy can carry.
Yeah, thank you, Vikas. On the derivative front, we are seeing a gap down today, but the data is positive. Open interest has come down quite drastically. That is a good sign. PCROI is also near 0.88 odd level, so that is also at a very comfortable levels. So nothing to worry there. And VIX has started to fall. It has come down from 20.5 to about 16. Uh, it is coming down, so that's a good sign. All in all, we expect with this data that Nifty might just see a good bounce back today. There is RBI policy as well today, and there can be some volatility, but post that, we might just see some pullback coming in Nifty also. The options we have seen some good put built up at 24,300, 24,200, 24,100 strike puts. So there is likely to be some buying coming in once the policy is announced. So look out for the same. 24,500 is a resistance zone. Once crossed above this, we can see some buying coming in up to 24,800 odd levels. From the stock specific front, most of the stocks yesterday witnessed good buying. There are a few stocks from the banking pack which have seen a lot of shorts, as I said even yesterday, and some short covering was seen in the later half of the session. So if that continues, we can see a good session for Bank Nifty, where a lot of stocks start to move up from today onwards. So look out for the same. Yeah. So that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the result side, ITD cementation result has improved. Order book, although has come down from 19,900 crores to 18,500 crores. But revenue has increased 5% sequentially, which is supposed to be a weak quarter Q1 after Q4, but that has increased 5%. And we have seen a sort of opposite trend in many other infra stocks. Also on year-on-year basis, revenue was up 30%. EBITDA margin was at 9.3% against last year's 8.8%, and March quarter 9.8%. Profit was at 100 crores against March quarter's 90 crores and last year 52 crores. So a good set of numbers. Slight reduction in order book, but we think that company's plate is full in terms of execution. So there is no urgency as such over next 6 to 8 quarters. Visibility is there. So it's a decent company to continue to hold. We remain positive. Aadhar Housing Finance result is okay. It's a newly listed affordable housing company. AUM grew 21% year on year, while disbursements were up 4%. Profits were flattish quarter on quarter, but up 37% year on year. Asset quality was stable, so stable set of numbers, and we are positive on Aadhar from long-term perspective. Thank you.
Good morning. In the con call, so we had attended the con call of Solar Industries India Limited, and the management indicated Q1 volume growth stands at 16.2%, while it has seen the realization decline by 12%. Overall order book with the company is at rupees 47.5 billion. It has seen international business performance was not well due to foreign exchange translation risk and the inflationary stress. While it has seen South Africa business has turned PBT positive for the first time, and the management expects this momentum to continue. Also, the management talked about its first delivery of indigenous loitering munition to Indian Army. It is a kind of aerial weapon with a built-in warhead, which is typically designed to loiter around a target area until a target is located. And further, it has guided for rupees 1,500 crore revenue for defense segment, as we had discussed it yesterday. This is mainly on account of its current order book of rupees 25 billion, and where it expects the order execution from the Pinaka and commercialization of other orders. Also, it expects robust demand over the long term. The company has planned for the capex of rupees 800 crore for FY25, and in the Q1 it has already spent 200 crore. The stock is trading at a PE of 58 times to FY26 CPS. We are long-term positive on the company, where one can accumulate at any dips. Credo Brands Marketing had also a con call. If you look at the financial performance, the revenue grew by 4.6% on a YY basis, and the operating margins improved at 26.9% against 25.5% in the June quarter last year. Overall, the management indicated that there has been the subdued demand over the last few seasons. Also, however, it has seen the April month was better in terms of performance during Q1. But it has again seen the challenges in the month of May, which were never witnessed in the history. For the quarter, the SSSG registered at 3%, and the gross margin stood at 58.6% against 57% in FY24. It has added 5 new stores, that is EBOs, and the total EBO store count stood at 430. And it aims to open 25 to 30 new stores in FY25. So EBOs is at the center of the company's core strategy. Also, it is focusing on the bringing cost efficiencies in order to improve the profitability. And management expects to improve the SSSG and profitability in the going forward. The management has provided the guidance of 15 to 20% of growth in revenue over the next 2 to 3 years. For the FY25, it stands at in the mid-teens. It plans to spend around 5% of revenue on the branding and advertisement, and it aims to reduce the working capital days. Also, the operating margins to be in the range of 28 to 30%. The stock is trading at a PE of 20 times to TTM EPS, and we are positive over the long term. Godrej Consumer Products posted the results yesterday. Result was broadly in line with expectations. Revenue degrew by 3.4% on a YY basis. Gross margin was up by 210 basis points at 55.9%, and EBITDA margin increased by 200 basis points. Overall, India business volume is expected to improve in the coming quarters, which will be mainly supported by its new launches, that is Goodnight Agarbatti, Aero Car Freshener, Fab and Genteel, and Synthol Foam Body Wash. These has already received the good response, and it expects the good volume growth. Also, it has observed very good performance in Indonesia with volume growth at 7% and revenue growth of 11% in CC terms. The performance in Africa, US, and Middle East has impacted due to currency volatility and shipping crisis. In addition to this, the company has announced its entry into the pet foods business under a new subsidiary, and where it will invest rupees 500 crore over the next few years. The company plans to commence the production in the second half of FY26. The stock is trading at a PE of 65 times to FY25 EPS, and we recommend to accumulate at current or any corrected levels, and we are long-term positive on the company. Coromandel International Limited posted the result below expectations. While it has seen the sequential improvement, revenue degrew by 17% on a YY basis, and 21% growth has seen on a sequential basis. Crop protection business volumes has improved by 5%. This is mainly led by the growth in technicals and formulations. Overall, EBITDA margin reported at 10.7% versus the expectation of 12%. The margins were largely impacted due to the lower subsidy rates and rise in input costs. The stock is trading at a PE of 22 times to FY26 EPS. Pidilite Industries Limited posted the results above expectations. Revenue grew by 3.7% on a YY basis, where it has seen the B2B business reported the volume growth of 18%, and CNB business has posted the volume growth of 8%. The gross margin continued to improve on a YY basis on account of moderation in input prices. Overall, it grew by 465 basis points over Q1 FY24. EBITDA margin reported at 24% versus the expectation of 21.6%. The stock is trading at a PE of 65 times to FY26 EPS, and will provide the outlook post con call. Thank you.
Good morning, everyone. So today, one IPO is going to get listed. The name of the IPO is Seagull India Limited. So the price band was 380 to 401, and the issue size was 1252 crores at the upper end. So we have given a subscribe rating to the IPO. As far as the background goes, Seagull India, founded in 2002, is an infrastructure construction company with expertise in specialized structural projects, including roads, flyovers, bridges, etc. By July 2024, the company has completed over 34 road and highway projects. These projects include 16 EPC projects, 1 HAM project, 5 operations and maintenance projects, and 12 item rate projects. Order book of Seagull has grown from just rupees 6,436 crores in FY22 to 9,471 crores as on June 30, 2024, translating to a CAGR of 12.6%. The order book to sales ratio is at 3.13 times its FY24 sales. This provides decent growth visibility over the next couple of years. Two USPs of the company are number one, asset light model. The company mainly has its machinery on buyback or a lease rent basis. This leads to lower fixed capital requirement for the company, and in turn to higher asset turn and higher return on capital employed. And this company has strong financial and a good track record of growth. The company has grown its revenue at a CAGR of 63% from FY22 to 24. Company's PAT in the same period has grown at a CAGR of 55%, and the company's EBITDA margins are also decent at 17%. As far as the valuation is concerned, the PE multiple for Seagull is at 22 times, which is at the premium to the industry average of 18 times. The company deserves to trade at a premium to peers on the back of strong track record and higher return on capital employed. We believe Seagull will sustain its premium valuations, and thus we have recommended subscribe to the issue. Thank you.
Yeah, that's all from us. And I'll recommend, one or two more results. Yesterday, Sangvi Movers reported results, and results were below expectations. Reason being the heavy monsoon, and which has started early, and also the political elections, which has disrupted the business, which has resulted into lower utilization of machines. And as such, the profitability came down in this first quarter. The EBITDA margin declined to 49% from last quarter, 55%. And even the revenue also came lower at 151 crores against 165 crores. Management has indicated that the Q2 will again be soft. Generally, in the rainy seasons, the business are low. And management has indicated that the utilization, which was 77% in this quarter, will come down to 75%. And the yield, which were at around 2.04, may come down below even 2% also. So that has trigger the sell-off yesterday. But what we see that going forward in third quarter, the things will bounce back because the requirement of the industry continue to remain strong. The renewable, specifically wind farm, outstanding order books of the various companies are at much higher level as compared to last year. So the requirement for the crane will increase in third and fourth quarter. So quite possible that the stock may remain subdued in the near term, but likely to see positive trend from the third quarter onwards. So short term neutral, but long term outlook continue to remain positive on Sunbeam Movers. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, prices in gold are expected to pull back till 69,200, and on downside one can buy around 68,750 with a stop loss of 68,500. In silver, the prices are consolidating, but pullback is expected. So buying around 78, 80, and maintaining a stop loss of 78,000 is recommended. On upside, again, it can test 80,000. So watch out for that. In crude oil, yesterday we had witnessed a massive rally. So buying on dips is recommended. Around 6,300 one can buy with a stop loss of 62.30. On upside, we are expecting 6,400 to 6,450. So buy on dips in crude oil. Whereas natural gas, one can expect prices testing 180, 82 levels on the upside. So on downside, 173 seems to be a good support area. So one can buy on dips, and if prices already test 180, 82, then one should avoid, as profit taking could be witnessed from these levels. In metals, prices are consolidating in copper, prices are consolidating from 765 to 775. Whereas important pivot point is 775. So if prices are sustaining above 775, then we expect again a rally in prices. The pullback should be till 785, and else it could correct again to 765. Whereas zinc, we are expecting prices to test 247.48 on the upside. So buying around 245 with a strict stop loss of 243. And again, 248, one can initiate a sell with a stop loss of 250. So that's it from us. Thank you very much.